How to build your credit score in 2023. First-time home buyers that are unable to qualify for a mortgage in January could celebrate the holidays in a new home by taking charge of their debt. So what can you do to improve your score this year? Here are 5 ways experts suggest boosting your credit in the new year. 1. Pay off holiday debt. After the holidays and into January, you may have leftover debt from travel and gift purchases, on top of regular bills. If missed payments or large balances carry over into the new year, your credit score could be negatively impacted. Payment history and credit utilization are the 2 biggest factors that affect your credit score, so make a plan to pay down your holiday debt. Start by reviewing your account statements to understand exactly how much you owe and how much you can afford to budget for repayment. If you're only paying minimums, it will take you longer time to pay down your balances, especially now that interest rates have gone up. Knowing your budget allows you to see if you're in a position to make more than the minimum payments on your debts. A good strategy to consider is paying more than the minimum on your newer accounts first. This is because scoring companies give more weight to activity on newer accounts. Paying down balances on new accounts will help build your credit faster than paying down the balance on all accounts. Setting up automatic payments and payment reminders can also help you pay bills on time and protect your credit score. 2. Avoid applying for new credit too often. Applying for new credit multiple times in a short period can raise a red flag and negatively impact your score. With each application, you'll get a hard inquiry on your credit that may cause your score to drop a few points. Applying for credit too often indicates signs of financial desperation. Lenders that view you as high risk may reject your application or offer less desirable terms such as high interest rates. Think carefully before applying for new credit, especially if you plan to make a decision like applying for a mortgage within the next few months. 3. Raise your credit limit. Ask creditors to increase your available credit limits on existing accounts. Higher limits will lower your utilization, as long as your spending doesn't creep up. To build your score, experts recommend keeping your utilization under 30% of your limit. 4. Make rent and utility payments count. Not all credit scoring models factor rent or utility payments into your score because this information typically does not get reported. If you lack credit history, there are services you can use to report on-time payments and build credit. One service is Experian Boost. This free feature from Experian gives you the option to report rent and utility payments made from your connected bank accounts. 5. Inspect your credit reports. Credit reports are basically records of your credit history. Staying on top of your reports regularly is crucial because scoring companies use the information on your reports to create your scores. If you discover an error that is affecting your score negatively, take immediate action and dispute the mistake with the reporting agency in order to protect your score. Make checking your credit reports a regular habit. Take advantage of free weekly reports through the end of 2023 offered by annualcreditreport.com. If you enjoyed this video, please like and subscribe to our channel so you never miss out on new content. Should you need the guidance of a realtor, Golden Realty Group can help. Please give us a call or visit our website at www.joegolden.com. Thank you for watching.